Welcome back to another Market Open live stream. Boy, oh boy, things are looking up right now. We've got the Dow is up and the indices are up on news that the United States is growing at an annualized pace of 6.4%, and unemployment claims data came in much lower than expected. As you know, one of the things that I like doing is always looking at the combined number for unemployment claims data, which we'll go ahead and start with that right away. So we had 553,000 initial claims for regular unemployment, a decrease of 13,000 from the previous week. So it kind of puts us on that nice trend of going down. We don't like it when it kind of bobs up and down. We want to see this trend going straight down. So even though it's only a decrease of 13,000, it's still on that nice trend down. And what I like to do is add the pandemic unemployment in as well. So here we go. We had 121,000 initial claims for pandemic unemployment. And if we add that on over here, we're somewhere around 664,000. And that is below 700,000 combined claims now, even though that is still a whole lot of people filing new claims for unemployment insurance payments. This is definitely on a very good trajectory. It's well under that combined million that we saw for so long in this pandemic. Been out of that for a little bit now, and we're really on a good trend now. Now it's under 700. Soon it'll be under 600 combined and 500 combined. It's a great place. This is obviously another headline piece right here. U.S. recovery gains steam as spending fuels 6.4% GDP growth. Markets were looking for 6% here. There's a beat. We've got, look at this. Personal spending topped estimate with annualized 10.7% gain. This is annualized, so keep in mind they're multiplying by 4 here. But it's leading the market to be excited. It's we're also seeing, and the global chip shortage is worsening here. Hits Apple, BMW, Ford. Tesla's been hit by it as well. I really want to start with the 10-year today to see what's going on with the 10-year, and then let's go take a look at the sticks. We got a couple. Look at that. Oh my gosh. The 10-year, the 10-year skyrocketing here on not only news of this faster GDP growth, but also that personal spending number. What happens is you're going to see the yield kind of explode a little bit when you get such hot data, because when you have such hot data and a data that comes in over expectations over and over and over again, you lead investors to believe that's it. The economy's overheating. There's no way we're not going to see more inflation. And so you often do see treasury yields move up on really good data like this. So if maybe we'll see crypto moving up as well, but let's go ahead and look at the stocks. So all stocks, let's go see what we got. We got Nokia all of a sudden up 16% in the pre-market here. Facebook up 7.4%. Clover, Mind Medicine, both of these up almost, Mind Medicine almost up 7% again. I mean, this has just been straight green. Look at this, green. Really incredible. Though it's had its moments. It's had its moments of pulling back. Still not holding over 5, but definitely some really nice growth. Cheesecake up 5.9, Qualcomm up 5.8, Plug Power's up 3.7, Carnival's up, Social Capital's up today, Apple's up 2.3. Not as much as it was in the after hours, but certainly up again. We've got ChargePoint up 1.9, XL Fleet's up a bit. Now we're already getting close to the opening bell here. We're actually within 20 seconds here. The losers right now looks like eBay, Playboy, Riot Blockchain. Let's get the bell.
Freaked out about it. It's Qualcomm,
Tilray, Microvision, Marathon. These guys all down on the downside here.
China. Carl, this one is the one that's going to be up the most after Facebook.
Yeah, after a series of downgrades, Jim,
yes.
In the past couple of weeks. It's going to be interesting to watch. I'm glad we got that in there. There's the opening bell of the big board. It's sports and entertainment company Endeavor celebrating its IPO. We're going to have Ari Emanuel in about half an hour. At the NASDAQ, it's MindMed, a biotech focused on treating addiction and mental illness. So, Jim.
Right, and on the left, you got Endeavor. That's cool. So, all right, what do we got over here? So this is actually Tesla, red candle sticking out of the gate. Tesla going from a current 0.66% gain, bobbing around with red candlesticks here, was 1% in the pre-market. Let's go ahead and see how things are opening up on the all stocks here. So Nokia holding on to that. Well, let's see. It's doing the red candle as well. Trying to hold on to 15% here. Facebook trying to hold on to 7.3%. Hydrofarm, hey, there we go. Cannabis play moving to the upside again here, up 7-8% now, and looks like it's certainly trending up. Big volume boost here right at the open. Yeah, keep an eye on Hydrofarm for some movement here. Mind Medicine stable here out of the gate. Clover somewhat stable. THCB stable. Norwegian Cruise Lines coming up 5.5%. People like seeing personal spending go up. Cheesecake Factory beat earnings as well, up 5.21%. Qualcomm up 4.7%. Bit of a red candle there as well. Yeah, look at that. Ethereum ran over to 2,800 for a brief moment there. It's currently at 2780. Plug Power 3%. Spirit Airlines 2.91%. Moderna 2.4%. Apple only 1.95%. Definitely getting the red coming out here in the open. Feeling a little red there. Let's go to the negative for a moment. So BTX, after some major runs, down 13% at the moment. eBay falling quickly here at 9.3%, trending down. Playboy down 6.5% at the moment. Let's see what's going on with Playboy. Is this beginning to be a trend here? Yeah, maybe a little bit. Started kind of a downtrend on Playboy as of the 27th, so a couple days ago. Downtrend on the 27th for the second half, downtrend on the 28th, and downtrending today. So remember that SPAC cycle. Dogecoin still sitting at 31 cents. You'd think if anything was going to push Doge, it would have been the GDP data today, but still stuck on Doge. Then, yeah, things are reddening a little bit here. We've got, oh, there we go. What's it? As we say that, Playboy recovering, actually recovering well. It was down like 6%. Now it's down 3%. Okay. All right. Well, there's the madness of the market for you. Canoe's down 153. Canopy's down a bit. Invite, Etsy down 1.53. Piton stuck in those lower 100s. Having a hard time getting out of there after the Netflix subscriber numbs, though maybe earnings will shake Peloton loose. We'll see. We've got Bitcoin at just below 54,000. So Bitcoin actually selling down a little bit. It did get it was over 55,000 yesterday, back down just under 54,000, now just over 54,000, but bobbing around that 54 figure. All right, let's take a look here. We'll keep an eye on how these things are developing. Cheesecake now going up 8%. Mind Medicine here at 4.6 again, and also red candling. All right, let's listen to Jim for a moment, see what they got going on.
Jim, this quarter, that's going to be a story. But it does sort of remind us about the challenges that McDonald's and Domino's face, both with good quarters. Comps, Jim, I mean, these charts don't even make sense. U.S. up 13 at McDonald's, up 13.4 at Domino's. They are passing it along.
It was a survival of the fittest. And there's 150,000 restaurants that didn't get to the promised land. Mostly, by the way, a lot of them didn't have any technology at all. These places are all fired up by technology. When you look at Yum one last night, David Gibbs, I mean, they have spent a fortune on technology, and therefore they're able to beat anybody. Pizza Hut is really, I've got Domino's on tonight, but Pizza Hut's coming on strong. They were and also ran, and I think a lot of it is because they know how to spend the money. They were cited in the Google call as someone who knows how to spend the money correctly. So, Carl, we can't spend the money. Look, I'm privileged, I know, and luck and did well in life, but the average restaurant cannot compete on technology. And your point of sale costs a lot of money now, and DoorDash is going to get its cut because they've made it so it's really DoorDash versus Uber. You're opening a restaurant now, and you have to really temper your expectations. We were profitable for a long time. I don't know. I mean, I just don't know how to stay profitable. I think you're just doing it, hoping that there's enough foot traffic. Got to have foot traffic.
Right. Right. That's a story for McDonald. We'll talk to the CFO later on this morning.
Oh, really?
Jim, Caterpillar is worth at least. Yeah, we got the CFO. I think it's his first TV interview.
Yes.
We got.
Okay, we're gonna jump on over to Varn for a moment, and then we'll check out Bloomberg. We'll see what people are talking about. Check out that top news too.
The S&P list of winners headed by LKQ Corporation, which I am not familiar with, but look at the cruise lines there. Royal Caribbean, Norwegian, both on the best, the top performers list in the S&P.
Hey, look, Tesla's actually recovering here. It's reading off the tickers. We like doing that too. Tesla's somewhat recovering here. So we had a red sort of beginning candlestick here at a lot of stocks throughout the market. And maybe a little bit of a recovery here. No, eBay's still falling. eBay's still going down 9.3 now. Ford's down 7%. Marathon and Riot all of a sudden again swinging back down 4%. With Microvision sitting at $20, down 3.6%. Playboy solidifying in that 3%, now trading down about 3.5%. Invitae, Peloton down about 1.5%. We've got Nokia, not running like it was there in the pre-market, up, still up 13.8%, but below that 14%. Hydrofarm's still pushing. Here's one that's still pushing a little bit. One to pay attention to. Cheesecake, Mind Medicine now up 7%. Really just incredible. This one just keeps pushing. Push. It's incredible. All right, let's go back to Varnes for a moment, and we'll hit Bloomberg.
In Miami, Tech Week. That will be Tech Week. It has begun. The mayor, Francis Suarez, he wants to make his city the next big tech hub. Has he convinced any companies actually to move there yet? I'll ask him. President Trump, moments ago, said this about the border crisis. Roll tape.
Didn't talk about the border. It's like a subject that they're not discussing, and that will be ruinous to this country.
Yeah, that's right. I mean, the Biden.
In fairness, Biden did talk about Dreamers yesterday, and sort of a path to citizenship.
Enforcement to the border. We're going to take you there shortly.
Of course, Fox wants to talk about the border. It's always the border. It's always the border on Fox Business. All right, let's go to Bloomberg. And then we'll go to some of these top news.
Apple is essentially the Tom Brady of the tech world. The skeptics will continue to say the best is in the rearview mirror, yet Brady just won his 7th chip, and Apple just reported its most robust quarter in roughly 3 years. Are the doubters going to keep doubting, Dan, and do you think the upside surprises will keep coming?
Well, mute button,
I think Dan Ives is muted. He was excited, so he muted, and hopefully we can unmute Dan Ives, and Dan Ives can actually respond to that question. Brian, to the question I asked to Dan, which was about big tech and the upside surprises we've seen, Apple's a monster, and they just churned out growth north of 50%. Brian, we spent a lot of time talking about the cyclical names, the traditional cyclical names, but this week's been dominated by, let's say, Alphabet One, which has got this nice cyclical story embedded within it, and then Apple again, which is just absolutely dominating and continues to dominate. What's your take on the big growth names?
Yeah, so if you are concerned about peak growth and you are concerned about what 2022 looks like, could be a bit of a return to normal, although I think we're going to get a better than normal economic year next year. As things normalize, assuming the runway stays quite smooth from an interest rate perspective, we should be seeing a rotation back into growth at some point. So while we were adding to economically sensitive names, cyclicals.
That's what I'm waiting for.
So we haven't really lost that preference for tech, because we know once the secular growth story becomes more important than the cyclical growth story, that a lot of these names are going to continue to be very much in demand, and that we haven't seen a slowdown at all in terms of the earnings trajectory of tech. It's just that relative to the rest of the market, it doesn't look as impressive when you're at these 50 or 60% quarterly growth figures.
But Brian, we keep doing this. We keep looking at tech as one distinct part of the market, and then we look at the cyclicals as something else, as if they don't have a cyclical story within tech. And when I'm thinking about a clean read on the cyclical trade right now, where chip shortage isn't actually going to damage the business too much, unlike Ford this morning, where we're talking about plant production in 2Q being hit by 50% could be cut by 50% because of a chip shortage. I'm seeing industrials, manufacturers, take 3M, use them as an example recently this week, struggling with transportation costs, raw materials. Cat, another one, another cyclical story, which should be getting a big pop. Also worried about not meeting that demand. I don't hear the same thing in tech, Brian. And I'm wondering if we're overlooking the cyclical aspect of the tech story, which has got a cleaner read on cyclicality than maybe the traditional cyclical names that have dominated the conversation for the last 6 months.
I think that's right. I think in terms of the actual sales and earnings for tech, that there is a cyclical component there. It hasn't traded like a cyclical sector because it's been so sensitive to interest rates. It's basically traded in the opposite direction from energy and from banks. So I think in that way, it's become sort of that negatively correlated sector, almost more defensively oriented in terms of how it's behaving. I would also say that something in the GDP numbers that I just noticed this morning is that most of the consumer spending growth, which was very impressive in the first quarter, was still oriented toward goods. And I think you should still be expecting that rotation, a pretty powerful one, into services, which grew in the first quarter, but not by the same amount, and has not come nowhere near to recouping the drawdown from last year, because people simply haven't gone back to consuming services the way they're consuming goods. So that also may take some of the pressure, positively or negatively, off some of these sort of goods-focused sectors. Could be manufacturing, could be technology, as more people are going out for more kind of experiential spending and less about kind of upgrading your smartphone or upgrading your home theater or doing the types of things that people have been doing over the last year.
I'm a little confused. I feel like another one here where it's kind of talking out of both sides here. On one hand, hey, there'll be a rotation back into tech and growth. Right now, tech and growth is trading in markets opposite to how the market is doing. The market's going up, and some growth in tech is trading down or weak, like defensive, he's saying. Then on the other hand, he's suggesting, but then again, we're also going to probably see a rotation into services, which implies away from goods. Now, maybe he just means both are going to grow. Who knows? But yeah, certainly, I mean, tech and growth has been beat up on fears of really just inflation. And that's why I believe that rotation back to growth and tech comes once we see that inflection point in inflation, and we finally know what kind of inflation we're going to see.
Sailing again, you see that stock higher, the airlines higher. MGM had been higher. It is actually reversed now, and movie theaters also higher. Turning to reflationary, because of course, two of the best three sectors are banks and energy. We will see that.
Let's go check out the sticks again, and then we'll go to some of the top news as well. So yeah, looking at the sticks here, I see some comments here on Amazon. Amazon reports this afternoon. So what do we got here? eBay down 10.5. For Brooklyn, I'm sorry, BTX here is down almost a full 10%. Ford's down an accelerating number here, 8.5% here. Marathon, oh wow, Microvision now down 7%. Teladoc down 8%. Yikes. Playboy down 4.9. Tilray down 4.5. Sort of an acceleration of losses here this morning. Arcimoto's down 2.5%. Invitae's down 2%. Let's see, Etsy's down 1, 2, 3. Churchill Capital's down fractionally here, 0.9%. Neo down a little bit. Neo earnings later today. I believe it's later today. I think it's like 5 p.m. or something like that. Xpeng, Palantir, both down about 0.4%. Tattooed, let's see here. Enphase, relatively flat, but technically down 0.13. Tattooed down, up a 0.17, pretty flat, both of those here. Nokia, Hydrofarm, so no major runs happening here that I could see. If anything, these guys flattening a little bit over here. Lemonade up 2%. Simon Property Group's green a little bit. Pinterest is up 1.2%. What I will say is insane is an insane move here by Apple, that Apple can literally beat iPad sales and Mac sales by over 30%, and iPhone sales by 15%, and wearable sales by 7%, and only be up 1.2%. It's really shocking.
See very strong GDP numbers, especially on the consumption side. So as you look at an intraday of 10s, you can clearly see that right around 8:30 Eastern, we popped a bit. But if you really want to know where the pop counted the most, it was on Tuesday. Let's look at a 3-day chart. On the left side there, and you can hardly see it, when we popped above 160 intraday, it has been a key pivotal area. Really, it changed the dynamics to some extent. And even though intraday levels have seen some buying, especially during press conference and some of the very logical arguments made by the head of the FOMC, well, we saw yields go down a bit. But in the final analysis, whether it's what's going on with equities or just the general notion that the economy is heating up or the tremendous amount of debt maybe getting more stingy with capital, we see rates moving higher. And if you open the chart up to August, you can see on August 4th, we had our low all-time close at around 0.5%, 50 basis points. We had the February meeting of 2021, which really changed the dynamic of this market. And then we started to drift a bit. But now we've turned higher, and that is significant. Look at a 24-hour chart of the Boon. Boon yields right now are screaming higher. They're at minus 18. Think about this. They haven't closed.
Well, let's go ahead and pull off news on other bonds here. So we can ourselves just take a look at the 10, 1.67. Again, we kind of see that trend towards an increase coming back. Hoping that levels out again. That's really what we want to hope for, is seeing that level. What we really don't want is this new return of suddenly big old growth in this 10-year treasury here. Is it possible that we keep getting data and this thing runs up to 2%? Yeah, but remember, folks, it's all about this trend. You know, this is what we had between January and February, skyrocketing really here in the rate. Here in the trend. If we draw it now, we actually get a steeper slope than we had before, which is not so good. But recently we were on this downtrend. I mean, look at this crazy downtrend we were on. We were on this green downtrend until all of a sudden we got this recent uptrend here. So we'll see. I mean, even if we maybe average out average out all of this and just go year to date. Let's just go to like January and try to average this out. You know, there we go. Draw it right there. Yeah, there we go. There we go. This growth rate here in the yield is obviously much slower than what we saw between January, Feb, and kind of what we've seen in just the last 4 days here. So, hopefully we keep that average pointing down. Or flattish. We don't want to see that yield spike too much here. We don't want those inflation fears to go and overheat. The more that 10-year goes up, the more some folks believe we're going to see the Fed react and respond and begin to taper sooner rather than later. Some say that's over 2% for the 10 years. Some say it's over 1.8%, which we're at 1.67 right now. All right, let's see here. Let's explore. These sticks look relatively stable right now. Relatively stable. Darden's up 2%. Wayfair's up 2% as well. JP Morgan and Redfin up a little bit, percent and a tiny bit here. Ford's really getting decimated on the chip shortage. Microvision down 10% all of a sudden. So we are seeing an acceleration here of losses at Microvision. Tesla is pretty much flat on the day, and so is Coinbase, sitting at 298, and Tesla just below 700. It's kind of the second day in a row we've been a little stock sideways there, if we can say that. Let's take a look at some of the news here. We've got President Biden's proposal to hit top U.S. income tax rate won't affect individuals or joint filers with incomes, but could impact couples who together exceed that threshold, even if their individual salaries do not, Jen Psaki said. Well, this has to do with, other sources of income. We've got, what else do we have here? Equity rallies are often thought to be built on a wall of worry. In other words, investors are overly cautious about the known unknowns and end up having to deploy capital at higher levels. This is no longer what's going on here. If anything, it seems as if investors are enthused about a huge pot of money being thrown at anything and everything. It's like the infrastructure package has already passed, and its first project has been to tear down the wall of worry. Wow. Big argument here by a blog on Bloomberg that is suggesting we're seeing this crazy rally in the S&P because of infrastructure spending and just the thought of it so far. Let's listen into what they got over here. Oh, breaking news again is just the record high for the S&P. Are they just going to do this like every 5 minutes as the ticker changes?
Yeah, did you see those peacock signups? It's pretty amazing.
I did. 42 million is that's a number.
And then you open up theme parks. I heard what Andrew was talking about. Who was talking about was a great reopening story. I have to believe that. And broadband's terrific. And people love the broadband. And I think that broadband is here to stay. A lot of people were worried about the European acquisition. I think that's paying off already. So I don't know. I mean, it's parent company, it's network, so you can take what I said with a grain of salt, but that stock should go higher.
Let's listen a little bit more here on Apple. I'm just really shocked that Apple's not up more than this. It's a sin. It's a sin it's only up 1%.
Of the growth story, but also the cash flow and buyback story that's going to continue into next year, which is why we believe this is going to be a $3 trillion market cap, even though right now it's skeptical peak earnings. Remember, the same that are talking about peak earnings, it's not sustainable today. Those are the same bears that were in their caves a year ago saying don't buy Apple because of the growth and the super cycle is not real.
Yep. Yeah. And now the doubters also talking about the potential of a chip shortage damaging things too. Now, Apple have put a number on it, 3-4 billion maybe. The Mac, iPads, sales could be constrained because of the chip shortage. Now, as you know, Dan, 3-4 billion for a company that's churning out $90 billion on any given quarter is not going to be a big deal. But as you look across the tech complex right now, Dan, do you see that chip shortage generating some execution risk for the companies that you cover, away from Apple, maybe the Teslas of this world, Dan?
No doubt it's thrown a fly in the ointment. And we've seen that across auto, across software, and just broader semis and tech. But I believe that's something that's already factored into numbers. And I think as we start to see a
moderate... I don't know about that, dude. Dude, if the chip shortage were already factored into the stock prices here, we would not see, in my opinion, Tesla suffering the way it is, dancing around 695 right now. We would not see Ford down 9.49%. We wouldn't be seeing this pain at the autos. I mean, honestly, NIO even, if it is that they're reporting earnings today, I think it's 5 Eastern. They're down almost 2% right now. I mean, they shut down their assembly lines for 5 days in the last quarter because of the chip shortage. You're going to see more of that. Chip shortage is a big old problem for these vehicle manufacturers. And I think Wall Street's going to beat them up more. It's going to create a little more of a crisis-tunity, as you can say, on buying some of these stocks. The problem is, it's just, there can be pain in just seeing the stocks kind of bob either sideways or slightly down or down from some of the higher levels that we've seen in the past. Certainly, NIO, Tesla, and the others are way higher than where they were in the March bottoms. I mean, Tesla obviously bottomed at like $530. NIO was like $33, right? We're a far cry away from some of those low levels, but it's still been painful. The EV sector. Last couple months, a lot of high growth has been painful last couple months. Spirit Air now up 1.61. Google's up 1.2%. Also another mega growth story, but the companies are so large. Amazon up about 0.9% here. Earnings later today. Apple 0.7% now. Really incredible. It's so insane that you could literally smash earnings so well. Like everything was perfect at Apple. Just a little mention of a chip shortage is all it took to take a 4% after-hour gain and turn it into a 0.7% gain. It's just before we know it, at this rate, Apple's going to be negative before the end of the day. It's nuts. BTX down 17% now. Microvision's down 12.8%. Again, accelerating its decline here. eBay accelerating its decline down 11.3%. Ford down 9.8%, Teladoc 8.1%. Chip shortage just beating folks up. GameStop down 3.65% today. Big Digital down a bit as well. Canopy and ChargePoint down about 2.9%. And to the upside, we're really not seeing a big runner today, Qualcomm, massive company, 4% move here is obviously great for a company like Qualcomm. Cheesecake, 8.81%. I mean, this is incredible. The Cheesecake movement too. Let's zoom out a little bit here and just look at the growth story of Cheesecake in terms of its valuation since the bottom of the pandemic. So bottom of the pandemic took this stock to $14. Right before the pandemic, we were around $42, which is what's shocking about the pricing for Cheesecake now is we have not seen $60 at Cheesecake since 2018. We were only at $40, $43 before the pandemic. All of a sudden, it's a $65 stock. I don't know. I do worry that it is possible we see a little bit of a correction on some of the recovery plays. I mean, that's a hot figure. And that's not to say that Cheesecake shouldn't be worth more than it was. But I mean, it's certainly, I would expect more efficient now after the pandemic. But boy, oh boy, I mean, restaurant sales are not back to what they used to be. At $65, it's way higher than where we've been sitting. Palantir at 23.4, another one of those that's been a little range bound here lately. Really kind of, look at that, stuck here between about 20 and 24, just bobbing up and down. It's just painful, long grind of essentially waiting for that rotation back into tech and higher value stocks. And even Enphase right now down about 3%, another down here. When that comes, nobody knows. Nobody knows. Is it going to be next week or is it going to be September through October? Nobody knows. All right, let's listen into Fox Biz for a moment. Let's see what we got. Let's take a listen. And we are commercial. Okay. Go to CBC.
Rich for Paratori.
Wrong way. Went to golf.
Yeah, no.
Let's see here.
It's based on guesses. We see a robotic system getting a firm.
Come on.
Investing in Bitcoin begin.
Nothing. Give us something here. Somebody says there's Tesla news. It's just what we need. It's Tesla news. All right. Let's see what it says. Yeah, golf will be relaxing right now. All right. Let's see. So I'm not seeing the Tesla news. So Tesla fans share video of driver sleeping in self-driving Mercedes or self-steering Mercedes. That's funny. Audi sees electric cars occupying half the global market by 2030. And really recent news here. Largest crypto exchange Binance might have broken the law with tokenized Tesla shares. Yeah, it doesn't surprise me given that they're trading securities without a SEC regulation. So I'm not seeing the Tesla news here. Tesla's whatever folks are suggesting. Tesla is flat. Yeah, so I'm not seeing Tesla should. The Binance and Bitcoin, Tesla with Binance. Yeah. I mean, this is just an argument of. I mean, I read that off. That's just something about. Maybe Binance not being regulated to sell their tokenized shares. Yeah, that doesn't really have anything to do with Tesla exactly. So, all right, let's go check out Bloomberg. So, okay, they're all on commercial. CNBC's on commercial. Bloomberg's on commercial. Fox Business is on commercial. Not running ads of the border yet. Oh man. All right, let's take a peek here and see what we got. We got Peter Schiff giving us some more reason to believe that inflation is around the corner. Let's take a peek at Peter Schiff here for a moment. Let's see what he's got to say today. As prices continue to surge, bond yields are rising as investors expect the Fed to fight inflation by raising rates sooner than forecast. Higher yields cause speculators to sell gold when investors realize inflation will win without a fight. Both bond yields and gold will soar. he's some of his comments are interesting. Yesterday he had some as well. A little bit more, 6.4%, but anyway. Yeah, so talks about lumber here. Yeah, I guess lots of commentary here on the speech yesterday by Biden. Let's listen to this though. Some news on home sales.
Looking for 5%. Gain year over year is 23%, but you have to be very careful with that number because anything compared to a year ago when the pandemic started and the housing market.
Yeah, number of home sales missing estimates here, up 1.9% versus 5.4 estimated.
Monthly gain we're seeing in 2 months. Realtors say that higher costs for homes as well as the record low supply is really what's standing in the way of more sales. That supply issue prices up 12% year over year, according to Case Shiller. Regionally, sales were up everywhere except in the Midwest. The realtors are saying they're still not seeing enough supply coming onto the market. Potential sellers still worried about listing their homes due to health concerns. Morgan?
Wow.
Diana Olick, thank you. We're 30 minutes into the trading session, and here are the three big movers. There's a lot of movers today, but here are the three big we're watching right now. Starting with Facebook, earnings and revenue beating the street as digital ad spending continues to surge. The company warning, though, that ad revenue could take a hit later this year due to Apple's new privacy policies. We're going to get into Apple's results in just a moment as well. As you can see, there are those shares of Facebook up 6%. Also want to mention Dow component Caterpillar beating on both the top and bottom lines. The recovery spurring global demand for its heavy machines with pricing in focus as well. Shares are down about 1.5%. Meantime, though, shares of our parent company Comcast moving higher on its earnings beat. Results were driven in part by strong growth in broadband and wireless customers. Those shares are up 3% as well, Carl.
We did just have Tesla circle down to the negative side. Look at this, down 0.09 right now. But yeah, Facebook doing very well, up 6.28% here. Go to the all stocks. Cheesecake still up that 7%. Not really seeing huge breakouts today. A little bit of a soft day. Mind Medicine softening a little bit, only up 2.18% right now. BTX is down 17. That was up 70% yesterday. eBay down 11% here. Microvision trying to recover a little bit from that sell-off we had this morning here. The chargers are down. Look at that. Blink Charging down 3.5% here. CLII down 3.5%. Charge Points down almost 3%. DocuSign's down. DocuSign and Domino's down together like 2.5%. It's just weird. Just really, really weird. Bizarro market. I mean, the fact that you can get Apple crushing earnings like that, and you're kidding me, it's at 0.6%. My gosh, I feel like just out of spite, if this goes negative today, or maybe not spite, maybe the whatever the opposite, maybe spite for the market. There we go. Just out of spite for the market, we should be buying Apple shares if it goes negative today. Apple is just such a phenomenal company, and to see it up only now 0.5% and really falling is just shocking after such an earnings crush, earnings absolute obliteration on earnings. Let's listen to Bloomberg for a moment. Let's grab it here. Where's our Bloomberg? Try to find the darn thing. Here we go. All right.
Allowing it to produce as many as 3 billion doses by next year. The investment in factories nearly doubles capacity. Joining us now is Moderna CEO Stefan Bancel. Stefan, always good to catch up with you. Congrats on the news. Where are you getting the most orders from right now? And I ask because the UK is buying, but India is the one that really needs shots right now.
We never really cover the vaccine news here. I don't know. We're going to listen to an interview on the vaccine news. All right, let's go to Varnes then. Let's try this.
That is Pete Hegseth. He usually appears with a big smile because he's a very positive kind of guy, but not so this morning. I think he's reacting to the president's speech last night. Go ahead, Pete, react.
Oh, man, Stuart, you're right. I mean, what a long, boring, ultimately very radical speech. And I think that's what has allowed him to do what he's done thus far. You're spot on. I mean, he wants to take us further than socialism. He wants us to be Europe. Yeah. But he's said in the campaign.
We'll pull off the politics as well. Jeez, all the channels right now are doing their own thing. Yeah, classic. What's over here?
marketplace right now. And
this is Endeavor on their IPO. All right. So what else do we have here? Let's see here. 10-year right now is at 1.67. We've got 39% off coupon code linked down below for the amazing programs and the live streams we do daily with course members to help answer your questions and share some thoughts on whatever your situations are. And with fundamental analysis, real estate deal analysis as well. It's super fun. Plus all the lectures that you get lifetime access to and all the new content. Check that out via the link down below. We do have Playboy now down 7.83%. Tried recovering there after some red on the open. Didn't quite do it. Ford recovering a tiny bit after falling to a low of just about 10% down. Micro Vision still about that 10.4% down. eBay still suffering at that 10.75 down. Arcimoto falling further here, now down 4%. I tell you, the EV is just getting smacked. Even GM's down 4% right now. So just the auto manufacturers in general, jeez, it's incredible. Snowflake's down 2.5. Enphase down again 2.8. Nowhere near as low as what we had seen during the March sell-off, where we got as low as, gosh, what did we get to? 133, something like that. But yeah, there's a dip buy opportunity. 1.9 on NEO. And on the upside, still in the same ranges as we've been. Nothing's really changing towards the upside. Some stocks trending a little bit more towards the downside right now after Biden's big speech yesterday. We'll see how, obviously, all those new taxes actually get implemented. A lot of talk and a lot of focus on Joe Manchin. Let's do a quick little Google here on Joe Manchin just to see if we can get some new insight on what some of his thoughts have been. Joe Manchin. Oh, that's all you have to type in these days. So Manchin is very uncomfortable with Biden's agenda's price tag. Well, it makes you wonder if he's going to be okay with the tax increases. We'll see. Very uncomfortable with the rising cost of Biden's agenda. It's a lot of money, Manchin told reporters. That makes you very uncomfortable. Manchin's comments came after the unveiled $1.8 trillion American Families Plan on Wednesday. Manchin said he wants to pay for as much as Biden's infrastructure package as possible because he doesn't know how much more debt the country should incur, but he has questioned whether raising taxes is the best way to fund the plan. We're at $28.2 trillion in debt now, so you have to be careful. There's a balance to be had. He has previously said he does not support Biden's plan to hike the corporate tax rate to 28% and instead would favor 25% on its own. The tax increase. Okay, let's see here. And are we going it to be able to be competitive and be able to pay for what we need in the country? We've got to figure out what our needs are and maybe make adjustments. Who knows? Adjustments, not really a big line in the sand there on some of the tax increases. So we'll see. He has also been quoted as saying he's not a roadblock, but that some of the details are going to be things that he's going to be looking at. So all eyes really on Joe Manchin to see where this entire infrastructure plan goes. He's going to be a very, very key vote in this infrastructure negotiation. So I gotta take off a little early today. So I will be back for the course member live stream, and then of course market close later on today. I appreciate y'all. Thank you so very much for being here. Good luck on your stocks and trades today, and folks, we'll see you later. Have a good one.